Hey guys, what's up? I'm Erin and welcome back to the channel. Every year, Warren Buffett, the CEO of Berkshire Hathaway, writes his annual letter to the shareholders. And every year, it is chock full of wisdom. It's an open and earnest letter full of investing successes and failures. This is probably the most widely read shareholder letter there is out there. You're unlikely to find a letter like this among any other corporation. And if you're willing to take the time to read it, reading his shareholder letters is like getting a crash course in investing. And shareholder letters going all the way back to 1977 are available for free on the Berkshire Hathaway website. This year's letter was no exception. The letter to the shareholders covering the investing year of 2023 is chock full of investing gems, wonderful takeaways that we can actually apply to our lives as investors. But before we dive into those takeaways, it might be worth touching on the perspective that this letter is actually written from. This letter to the shareholders is written in a casual conversation style tone, like it is every single year. But simply through his writing, you can tell the importance that Buffett places on relationships. Consider for starters that this year's letter is written in a way that it's almost written as a letter directly to Warren's sister, Bertie. Bertie is smart, wise, and likes to challenge my thinking. We have never, however, had a shouting match or anything close to a ruptured relationship. We never will. As he continues on with his letter, he writes information that his sister, as an individual investor, would want to know. He writes to the individual, not to the masses, and that's really part of the appeal of these letters. As you read through the letter, this dialogue is present throughout the entirety. He gives praise to his late partner, Charlie Munger, who recently passed away. He gives praise and accolades to his co-workers and to the leaders of the businesses that he invests in. It's this type of touch that really humanizes Warren Buffett and the advice he gives. And the way he talks about people gives us insight into the way he invests. When he invests, he considers the individual he's investing for. It shows us the importance that he puts on relationships. The way Buffett describes his sister actually reminds me of my brother Andy. I am incredibly blessed to have an amazing older brother who is incredibly smart, incredibly driven, and challenges me to become a better person. He's so supportive that he actually watched my YouTube videos back when I started my channel, when my videos would get probably 4 views. 1 from my brother, 1 from my husband, and 2 from me. We all have to start somewhere. And while this may not be an investing lesson, I do think placing a really high importance on surrounding yourself with good people, supportive people, people who push you, is a good life lesson and goes a long way to helping us live better lives. But without further ado, let's dive a little bit deeper into the investing lessons from this shareholder letter. Tune out the noise, no matter what is happening around you. Buffett, as he describes the individual Berkshire Hathaway investor, as he describes his sister, says, Bertie, like you, understands many accounting terms, but she's not ready for a CPA exam. She follows business news, reading 4 newspapers daily, but doesn't consider herself an economic expert. She is sensible, very sensible, instinctively knowing that the pundits should always be ignored. In my honest opinion, this really describes much of my audience. Those of us who are constantly seeking out financial information end up developing really good financial habits. And really good financial habits kind of just comes down to being sensible. The more you tune in to this type of content, the better you get at tuning out the noise, tuning out the sensational. Buffett adds, America has been a terrific country for investors. All they have needed to do is sit quietly, listening to no one. Ignore all those news outlets and the individuals telling you what's the best thing to be investing in and when's the best time to invest and when's the best time to sell so you can capture best market returns. For the best performance you can possibly get, the best advice you can follow is to get invested and stay invested, and you'll do great. In his letter, Buffett addresses the great swings that can happen when you manage a portfolio the size of Berkshire Hathaway. He talks about how on any given day, they can have unrealized capital gains or losses in excess of $5 billion. But he says that's not something he focuses on, and you as an investor shouldn't either. Make no mistake about the significance of capital gains. I expect them to be a very important component of Berkshire's value accretion during the decades ahead. Why else would we commit huge dollar amounts of your money and Bertie's to marketable equities, just as I have been doing with my own funds throughout my investing lifetime? And I think this is an important lesson for all investors. Do your gains and losses matter? They do, but they shouldn't be your primary focus. If you're a long-term investor, you should just be focusing on staying the course. You shouldn't be focusing on these short-term market movements. During the time of the pandemic, your portfolio likely took a big dive. If you're a broad market investor, you likely had a portfolio that performed very well in 2023. Market swings will happen in both directions, but what matters most is that you hang in there for the long haul. While Warren Buffett himself is an active investor, he manages Berkshire Hathaway, he has long been an advocate for long-term investing and passive investing. Our goal at Berkshire is simple. We want to own either all or a portion of businesses that enjoy good economics that are fundamental and enduring. Within capitalism, some businesses will flourish for a very long time, while others will prove to be sinkholes. It's harder than you would think to predict which would be the winners and the losers, and those who tell you they know the answer are usually either self-delusional or snake oil salesmen. Repeatedly picking investing winners is no easy feat, and for most of us, it's not even worth trying. However, for whatever reasons, markets now exhibit far more casino-like behavior than they did when I was young. The casino now resides in many homes and daily tempts the occupants. And I think a lot of this has to do with how widely accessible the stock market is these days. You can simply invest through an app, and all it takes is a matter of seconds. On the one hand, I love how accessible the stock market has become to everyone. I love that there are now low barriers to entry. It's really hard to remember those days where we actually had to pick up the phone and call a broker to execute a trade. Those days are long gone. Now everything is at the tip of your fingers. But while everything has become more accessible, a lot of these platforms do encourage more activity and more trading. Warren Buffett, on the other hand, is the king of long-term investing. He has an investing career that spans nearly 70 years. When you find a truly wonderful business, stick with it. Patience pays, and one wonderful business can offset the many mediocre decisions that are inevitable. The arena in which we operate has been and will be rewarding if you make a couple good decisions during a lifetime and avoid serious mistakes. I think that really applies to our lives as a whole. If you make a few right decisions in terms of what house you buy a house well within your means. You buy cars that are well within your means. You keep your education debt well within your means. You choose the right spouse, one who's on the same page with you financially. You can offset a lot of other little, small, bad decisions, but get the big decisions right, and it can go a long way to making your financial life much easier. And when it comes to choosing stocks, most of us are not going to be that great at it, because for most of us, investing is a secondary effort. We typically have a day job that occupies 40 or 50 hours of our time, and investing is something we do on the side. The beauty of investing from a passive stance is you simply follow an index, like the NASDAQ, the S&P, the total stock market fund. The beauty here is that you're investing in everything. You aren't picking and choosing individual stocks hoping to win. You aren't going all in on black hoping to win. You are betting on the US stock market as a whole, and that is an easier bet to win. Buffett again uses his sister as an example. Bertie has made no new trades during the past 43 years. During that period, she became very rich, even after making large philanthropic gifts, think 9 figures. Millions of American investors could have followed her reasoning, which involved only the common sense she had somehow absorbed as a child in Omaha. And taking no chances, Bertie returns to Omaha every May to be re-energized. Investing is a very long road. Getting started and sticking with it is a surefire way to reach success. But as simple as it sounds, when the only thing you have to do is do nothing but stay the course, sometimes you need a little reminder along the way. Again, this road is going to be 30, 40, 50 years when we're talking an investing career. That's why so many of us constantly seek out financial content. Often it serves as a reminder to stay the course. When it comes to investing in life, the good thing to know is that you have loads of chances. You have loads of chances to get things right. Buffett has talked about, as Berkshire Hathaway has grown, it's been harder to find new businesses that fit within their model and harder to find new businesses to invest in that will actually move the needle because their business is so large. Stating, for a while, we had an abundance of candidates to evaluate. If I missed one, and I missed plenty, another always came along. I think the biggest takeaway comes in the second half of that statement. If I missed one, another one always came along. If you didn't get started investing at 20, you can get started at 25. If you didn't get started at 25, you can get started at 30. There's always another chance. I think this applies to so many different areas of life. A lot of times we can look back and say, oh, I should have bought a house at a different time, or it would have been so much better if I invested in that one stock during that one period of time. But hindsight is always 20/20. We can always look back and see what the better decision would have been, or what better timing would have been. But in the moment, we can only operate with the information we have at the time. But the good news to note is that there's always more opportunities. You never have to feel like you completely missed the boat. I bought a home in 2021, and 2021 was a wild year to buy a home. Every offer I made was rejected, and I was constantly outbid, and I definitely had this feeling that I was missing an opportunity. But I had a wonderful brother who reminded me to stay the course, and reminded me that there's always more homes, and there's always more opportunities. Always be prepared. Buffett states, Berkshire Hathaway also holds a cash and U.S. Treasury bill position far in excess of what conventional wisdom deems necessary. We did not predict the time of economic paralysis, but we were always prepared for one. And I think that's a really important distinction between preparation and prediction. Being prepared for the worst case scenario doesn't make you a pessimist. It actually puts you in a really good position. It doesn't assume that you're looking at something saying something bad is about to happen. It just is taking the stance saying, I am prepared for when something bad happens. There's always doomsdayers out there constantly telling you everything's about to fall off a cliff. But realistically, when it comes to the economy, there will naturally be times where we have upswings and downswings. When it comes to your personal finances, you will naturally have times where you have upswings and downswings. And being prepared for those downswings makes them easier to weather. And financially speaking, the best way to prepare for these downturns is to have a healthy level of cash reserves on hand. As Buffett says, he has more cash on hand than conventional wisdom says is necessary, but he is prepared to weather any storm. On this channel, I talk a lot about having an emergency fund and how the financial pros recommend that you should have anywhere from 3 to 6 months worth of expenses saved up and at the ready so you can weather any storm. And I think that's solid advice. Personally, I tend to have a little bit more than that saved up because I want to be prepared to weather any storm. The Berkshire Hathaway 2023 annual report also has a category called the Scorecard in 2023. And this is where he gets into the nitty-gritty detail of the numbers. But that terminology reminded me of the terminology I heard when I was reading his biography, The Snowball, and that was the inner scorecard. In his biography, he discusses how it's more important to measure life on an internal scorecard. These are things like, are you meeting goals you've set for yourself? Are you the person you want to be within your relationships? Are you a person of integrity, measuring success against your internal values? I had never heard about the internal scorecard prior to reading this biography, but I think it's a great concept and I still try to use it to this day. I think it's a really important take to measure success internally in terms of the person you want to become, rather than against some external measure, whether that's a person other people expect you to become, or some financial metric, or any other measure that's outside of your control. Looking internally is going to be far more favorable and far more rewarding for your own personal life. I love Warren Buffett's annual letters to the shareholders. I think if you read them, you can gain a lot of insights on investing, but if you read them close enough, you can learn about more than just investing. Let me know down below if you read those annual shareholder letters or any takeaways that you've gotten from them. I post new videos every single week. If you got anything at all out of this one, please give it a like. If you're new here, please consider subscribing, or if you know of someone who might get something out of this type of content, please consider sharing. I'll see you soon. Bye.